Good morning, this is Terry Roggensack with the Hightower Report with an update for the ADMIS grain news this morning. In general, for the grain markets, when it rains, it really pours. Lots of negative demand news out overnight. China PMI numbers quite negative overnight. That flowed over to the UK. PMI numbers also quite negative, so the global economic situation continues to worsen. U.S. employment numbers also quite negative this morning, and it looks like we're going to start off with a very negative outside market influences this morning. The stock market sharply lower, the U.S. dollar pushing up to the highest level since August of 2010, and the general selling pressures from fund traders across the board in a wide range of commodity markets, crude oil, all the soft markets, and lots of commodity markets in general have been under pressure over the last couple of weeks. Macroeconomic fund traders, aggressive sellers across the board. So they're going to need follow-through news to hold them as aggressive sellers in the market. On top of the negative macroeconomic news, we also have other demand news which was not too favorable for the grain markets this morning. Weekly export sales for soybeans coming in at only 418,700 tons. Traders are looking for somewhere near 575,000. Corn, 282,700 tons. Traders looking for 550,000 tons. And wheat at 319,200 tons. Traders looking for 425,000 tons. The sales numbers negative. China's backing away from the grain markets in general, and the strength in that dollar really helping to contribute to more active selling for both Brazil and Argentina. So grain prices, in their eyes, they're at levels where they like to be selling, and end-user buyers from around the world seeing the strength in the dollar as an incentive to look elsewhere for grains. In the weather outlook, the supply outlook, though, continues to look to tighten. The June supply-demand reports likely to show a tightening of old crop and new crop soybean ending stocks. This, along with the weather outlook, the short-term weather, the rains not quite as good as traders had expected especially for southern Illinois, southern Indiana, the northern Delta region. That region could be back under stress in not too long. 6 to 10 day is going to be warming up some. And with very little moisture across the Midwest and northern Delta region, only the far northern sections of the Corn Belt look to receive rains out into the 11 to 15 day models. And quite hot weather starts to begin to move into the western sections of the Midwest during that time frame. So we could be looking at pretty stressful conditions into mid-June if this weather continues. So any let-up on the bearishness and outside market forces today or into Monday would likely cause the grain markets to put in a near-term low. 50% correction for July soybeans of the big rally we saw December through April comes in right at 13.19 today. So 13.19, if we hit that level or if we turn higher from that level, looks like aggressive short-term traders might consider being long from that level. In the case of the corn market, we're looking at a similar level for Dees corn down at the 505 level. We would expect the market to hold well down at 505, and we're looking for a move back up to the 564 level over the near term. This not enough rain for the short term, only enough to really keep the crop from worsening, and maybe some improvement over the next couple of days. But we're looking back into dry and stressful conditions. That northern Delta, southern Midwest corn crop will be pollinating into mid-June, and traders will see stressful conditions as a reason to suspect cheaper yield. Again, 505 to 564, the anticipated range in Dees corn over the near term. Dees wheat has had a big pullback off of the highs. Should see good support, 673 3/4 today. We'd look for a 673 3/4 to 701 1/4 range in Dees wheat over the near term. Thank you. This has been an update for the ADMIS. All the views today were my own and not the views of ADMIS. Thank you.